Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, May 27th, 2020, and I am pre-recording this Trading Places Live for Thursday, May 28th. Currently, futures are flat after we had an extremely volatile session on Wednesday. We're going to get into all of that in just a minute, but first, let me walk you through today's agenda. We will get into the daily market recap, and it was a crazy day on Wall Street for sure. Talking technically would be next up. There are a couple areas in the financials I want to draw your attention to. Not only give you the industry groups, but also some of the stocks that are helping those two groups really begin to show some muscle in the market. And we'll get into some chart breakouts. We've had a bunch of those lately, but I'll go over some of the big ones that we saw on the S&P 500, and really across some of the key indices. But there will be a number. I'll try to go through about 10 or 12 of those. Also, a lot of earnings out after hours tonight on Wednesday, so I'm going to go through some of those, tell you how the market's reacting there. And then we will wrap up the show with 3 you must see. And a couple of these are breakouts. And then I'm going to wrap it up with one that had a massive reversal on the NASDAQ at a key support area. So you want to hang around. That'll be at the very end of today's show. All right, before we get going, I do want to point you to earningsbeats.com. We do have a free Earnings Beats Digest newsletter. Simply put in your name, email address, hit subscribe, and you'll get that every Monday, Wednesday, and Friday morning before the stock market opens. I think I'm probably going to start spending a little bit more time talking about companies where we're seeing short squeezes. This has been a pretty, well, not just pretty, it's been heavily shorted. There's a lot of folks that have been shorting the market on the way down, been somewhat skeptical of the rally. They've continued to hold on to their short positions, and now they're going to face a squeeze on a lot of companies. I've written about a few of these in the past. I wrote about Tesla back in December. I wrote about Peloton right before it went up about 50% in just a couple of weeks. And then most recently, I wrote about Ollie's, OLLI, which was trading at about 72, 73 at the time, was trading over 90 today. And I'm talking about just here in the last couple of weeks. So these short squeezes are very real. And when you get a technical breakout, especially stocks that are starting to show some relative strength, and they get a breakout, not only you have technical buyers coming in, but then you got short sellers having to worry about what to do. So I'm going to talk a little bit more about that in some upcoming articles in the Earnings Beats Digest, so you definitely want to check that out. Also, make sure you check out my blog at StockCharts, Trading Places Live. I was thinking about one stock in particular I might write an article about here pretty soon. So if you were to go over to, let me see if I can bring this up for you. Go over to StockCharts and go into the articles and go over to Trading Places. And if you pull up an article and just simply go down to the bottom of the article, after I sign off, you'll see a box where you can subscribe to any blogs at StockCharts. But if you subscribe to mine, as soon as I post an article, it'll be sent to your email box. So definitely take advantage of that to get those blog articles in your email box at the time they're published. All right, let's go ahead and jump into what happened on Wednesday, because it was a wild day. First of all, everything looked pretty good at the open. Or certainly better than, say, at 11 a.m. after about 90 minutes of trading. But the Dow Jones was up. The S&P 500 was up. The NASDAQ, on a relative basis, did not perform nearly as well. But after some very strong selling in the first 90 minutes, we saw a big, big rally on the NASDAQ. We were down about 2%, and you can see the NASDAQ ended up 0.75%. So that was a pretty big rally. And we hadn't really seen a whole lot of selling in the NASDAQ, especially over the past couple of weeks. So that caught a lot of traders by surprise, but we did see those buyers come right back in. So the Dow makes its breakout above 25,000. The S&P 500 makes its breakout above 3,000. The NASDAQ literally just a couple percent away from an all-time high. Very impressive action on the NASDAQ today with that recovery. And then joining the parade of breakouts, got to throw in the mid-cap index, the S&P 400 mid-cap. and the S&P 600 small cap. You can see here on these little mini charts, the breakouts above the late April highs. Very bullish action across the board. For the second consecutive day, financials, industrials, and real estate, 1, 2, and 3, just like that. Financials taking out this double top from April. Industrials clearing the late April high. Not quite so bullish on real estate yet, but we did move back up above the key moving averages. And now the XLRE has its sights set on that 35, 36 price resistance area. Consumer stocks also did very well on Wednesday. Discretionary stocks, you can see, rebounded very nicely, went up 1.7%, and staples up 1.5%. And if you look over here, you see financials 4.3%, industrials 3.3%, huge rallies. So now we're getting the other areas of the market to catch up with technology and healthcare, which for the last 2 days has just kind of taken a back seat. I did notice, though, healthcare, which was down pretty significantly at one point during the day, came rallying back and finished up, I think, over 1% on the day. So pretty strong rally and reversal. Even in some of the areas that were beaten down early in the day, we saw a pretty good reversal in the market, and I like that. All right, let's move on to the 10-year Treasury yield. Now, looking ahead to Thursday in terms of economic reports, we've got a bunch of economic reports on tap. April durable goods will be coming out. Remember, March came in minus 14.4%. April's not going to be any better. In fact, the estimate is for minus 18.2%. And if we strip out the transports, the number is minus 14%. That's the estimate, which is way lower than what we saw in March. That was only a minus 0.2%. So durable goods should come out with a pretty awful report, but the market's anticipating that. Q1 GDP, second estimate coming out. First estimate out last month was minus 4.8%. That's exactly what the second estimate's looking for, minus 4.8%. Then we've got initial jobless claims. All of these, by the way, coming out at 8:30 Eastern. In initial jobless claims last week, 2.44 million claims. This week, 2.1. So still a high number, but it is coming back down from those huge numbers that we saw in recent weeks. And then at 10 a.m., we've got April pending home sales coming out. March was minus 20.8%. April is expected to be minus 15%. But we have seen some better than expected numbers coming out in some of these home construction reports. We'll see whether or not that string continues tomorrow morning with the April pending home sales. All right, some of the top stories. I mean, we're going to get into talking technically in just a second, but top stories, of course, Dow Jones above 25,000, S&P above 3,000, NASDAQ with that huge reversal, mid caps, small caps breaking out. Retailers littered the S&P 500 leaderboard on Wednesday. And as I mentioned, financials and industrials for the second consecutive day really outperforming the market. And that's been a pleasure to see, because these are two aggressive groups that have been underperforming. So if healthcare and technology are going to take a back seat, these are two groups I would really like to see it take a back seat too. Anytime we see the financials and industrials gaining strength, that's a good sign for the market. All right, 10-year Treasury yield. On Wednesday, you can see we did gap higher. We were up to 0.72% on the open, but we did come back down and I think just continue to consolidate here at the 10-year Treasury yield. We'll see what happens with all these economic reports out tomorrow. You know, a big break, I would say if we could get back through about 0.8%, that would even take out this reaction high back in early April. And I think that could begin to lead to more of a sell-off in treasuries, sending the yields higher. And that in turn would be additional money, perhaps billions of dollars, that could flow over into the stock market. So I don't know, stock market continues to look very, very strong to me. And I really like that reversal on the NASDAQ today, because I thought in the very near term, maybe we were going to see a little bit more selling, but that was not the case. We did reverse strongly, and that was a good thing. All right, let's move on. Talking technically, I want to first show you the mortgage finance group. And you can see multiple tops here. 4 different times we tried to get through about 560, 565, never could make it. Well, check out Tuesday and Wednesday of this week. I mean, I don't think there's any doubt at this point now. We have not just broken out, but we are soaring higher in the mortgage refinance area, or mortgage finance area, I should say. So this breakout here, not only have we taken out 560, 565, but we've moved all the way up to almost 650. That's about a 15% move above that breakout area. Very, very strong action in the mortgage finance area. All right, so what stocks in this group might be worth considering? Now, some of these have really advanced, so I would not be fearful of buying these on pullbacks, but chasing them could be, if we get a little profit taking, kicking in for a couple of days, if you chase, that could get a little bit painful. It's hard to say. Are they going to pull back? Eventually, I would say yes. Whether it's short term, whether it's on Thursday, that's a much more difficult call to make. But ESNT, this is Essent Group, big breakout on Tuesday. We really continued that yesterday. Stock up 14% on Wednesday alone. Look at the volume coming in. All of a sudden, a lot of volume, and you see the accumulation distribution, which had been downtrending for quite a while. Now, all of a sudden, we're seeing that turn back up to the upside. So ESNT looking good. Lending Tree. Now, this one's a little bit closer to the breakout level. It's been performing pretty good, though. You can see this bounce off the 20-day moving average a couple of times earlier in May, and now we're getting the breakout. This was a key area where we had moved higher on a reaction high back in mid-March. Couldn't get through 260, and while the overall market kept going higher and higher, we could not get through that 260 level until Wednesday. I think Lending Tree looks like it could certainly go higher here. This one doesn't trade as many shares as some of the others, so it's not quite as liquid. That would be one smaller concern, that I would have. But I do like the breakout here, and I expect that we'll see some additional follow through. Walker and Dunlop, WD, another breakout here. Multiple tops trying to get through 40. Couldn't do it, finally did. And not only that, we took out that late March reaction high. Even though it wasn't by much, we did take it out. So volume's been very strong. PPO's turned positive. Here's another stock looking pretty good. FNF. This is Fidelity National Financial. Breakout occurred on a closing basis on Tuesday. Wednesday, we took out this intraday high from back in the second week of April. So it looks to me like FNF is poised for additional gains to the upside. Look at the volume just pouring in the last 2 days on this breakout. Lots of money rotating into these areas. RDN, how about Radian Group? A nice breakout above this 16 level. We struggled for, 4 or 5 different times trying to get through 16, couldn't do it. We gapped up, looked like we were going to reverse back down, and then rallied back into the close. Nice volume. I think RDN looks good. Look at that PPO above the center line rising. How about the banks? This is another area within the financials that have just exploded. There's your double top on the bank index in April at about that 355 area. Closed at 358 on Wednesday. So this could lead to some additional buying. Once again, we opened up, pulled back intraday, and then came rallying back, finished right near the high of the day. I love the action into the close. Look at that PPO just breaking centerline resistance there. I think the banks look good. So which banks look good? Well, I would start off probably with DB, which is Deutsche Bank. Deutsche Bank broke out on Tuesday above these highs, really moving up. I'm going to go into the relative charts here on the banks and look at Deutsche Bank. Now, even though we were going down, and maybe if you're just looking at the absolute chart, you might not have noticed, but this is a stock that's been outperforming the bank index now for about 6 months. And on this breakout, we were already setting a new 52-week relative high on Deutsche Bank versus the bank index. So now you've got not only a breakout, but you've got one of the relative leaders here. On a pullback, I really like DB. PB, this is Prosperity Bank shares. On a relative basis, again, you can see a stock breaking out to a new 52-week relative high before we got the actual absolute breakout. But this was a key area of gap resistance that we couldn't seem to get through until Tuesday. And now all of a sudden, we've got some pretty good action going on here with Prosperity Bank shares. Next up, how about CBSH? This is Commerce Bank shares. And another one that just broke out on Wednesday. So nice action on Tuesday, but the real breakout occurred Wednesday, volume picking up. I think CBSH also showing relative strength. And this is kind of the key for me. If I'm going to go into these banks or into the mortgage finance area, I want the stocks that are leading these groups. I feel better because if the index pulls back, I feel like these are probably going to hold up better than the overall group, just because they've been showing relative strength now for a little while. Another stock, another banking stock, AX. This is Axos Financial. This one broke out on a closing basis, but hasn't cleared the high that we saw back in late April, just above $24. Closed today at $23.74. I think it's just a matter of time. Look at the accumulation distribution on this stock. Not too many banks on the way down were showing an accumulation distribution going higher. This one did. And on a relative basis, again, end of April into early May, we were looking at relative highs being set, 52-week relative highs on AX versus the bank index. So this is another one I think looks good. FRC, this is the First Republic Bank, San Francisco. Really like this one. This is a stock along with AX. This is a stock that's on my strong earnings chart list at Earnings Beat. So the reason they got on there is not only did they beat their earnings and revenue estimates in their last quarter, but they also were showing solid relative strength. So I showed you AX. Look at FRC versus the bank index. Also very, very strong. So now that the bank index is performing better, I like a stock like FRC. It made that breakout, volume picking up, looks pretty good to me. And then the last one I'll mention, this is a large cap, PNC. Among the larger banks, I think this is one of the better ones. So if you want to, if you're thinking about large cap bank, money center bank, that sort of thing, I think PNC is maybe the way to go. We did get that breakout above the late April high, and notice the relative strength. Again, while we were consolidating down here, notice the subtle strength building in PNC versus the bank index. I like that. And now you got the breakout to go along with it on Wednesday with rising volume. I think PNC looks like one of the leaders among the big banks. So anyway, that is talking technically for today. Chart breakouts. Chart breakouts, I think when you look at chart breakouts, I could go in a lot of different directions. I mean, there are so many charts that we're breaking out today. But here, if you take a look at chart breakouts, you can see American Express. American Express, triple top, maybe even quadruple top here at about 95, 96, 97, no more. On Wednesday, AXP breaks out, closes above 100. The volume picks up to its highest level in probably about 7-8 weeks. And we got that big breakout. So AXP, and starting to show a little bit of relative strength in the near term. Now, if I was playing a breakout like AXP, I think there are two levels to watch to the downside. I think this 95 area, I would be watching maybe for some price support. And then if you want to give it a little bit more room to the downside, it would be that rising 20-day moving average. So best case from an entry perspective would be to see AXP pull back. And I think buying around 95 or 96 down to the low 90s, near that 20-day moving average, would be best entry. Now, I don't know if it goes back down there, and I do think AXP is going higher. I think this is going to be a rising tide, lifts all boats or most boats type of scenario with the stock market as we go forward. So I'm a fan of AXP, but I like this breakout. I do think it eventually goes higher. Question is, do we pull back first? Next up, how about Goldman Sachs? Goldman Sachs making a breakout, actually broke out on Tuesday, extended it on Wednesday. Look at the volume pouring in. This is not small volume. This to me is institutions. I think we've got accumulation probably that's been taking place a little bit over the last couple months, but I think with this breakout, we are really starting to see some institutions moving in. Also, how about Kohl's? I have not been a fan of Kohl's, KSS, but when you finally get the breakout, you have to recognize, hey, we got a breakout. We saw this double top breakout in Kohl's on Wednesday. Here's why I don't like the stock. You can see it still is not one of the leaders. In fact, it's been underperforming the apparel retail group for quite some time, but still you have to respect a breakout with increasing volume, and that's what we saw on Wednesday. All right, how about DFS? DFS, we got the breakout right here, trying to get through 45. We did it. We gapped up. Look at the volume again, picking up, closing above. Got a nice move to the upside. I think the DFS looks pretty good. There's your volume. And on a relative basis, we moved to about a 2-month high, maybe 10 weeks or so. But that's good news, breaking out against the DJUSF. And you can see this is an area, consumer finance, where we have been performing pretty well now for about the last 5 or 6 weeks. So good strength in the group. And now we're getting some breakouts in individual stocks, Discover Financial being one of those. All right, SYF. This is Synchrony Financial, also making a breakout, closing above that 21 area, 21.35. Again, check out the volume. I can't emphasize this enough. I'm a volume person. I'm a volume trader. There's nothing more important to me, nothing more important than a price breakout with volume. So and again, there are a lot of other areas in the market I like better than the financials, but I do recognize things are improving here. I like these breakouts that are taking place. Cruise lines. I'm not going to lie. I'm not a huge fan of the cruise lines. I'm not a huge fan of airlines. I think that these are two groups, especially airlines, I think are going to have to struggle for quite some time with the coronavirus and the impacts. I just don't know how you attract customers on a big scale basis. I don't know how you get your customers back as long as there's a threat. And the threat is much bigger when you've got groups coming together. I mean, you can do what you want in terms of social distancing, but it's not easy in an airplane to social distance where you have no real air movement. So I don't know. NCLH did make a breakout in terms of clearing these prior highs on a closing basis. The volume was heavy. If there's a group, a couple of groups, like I said, that I'm a little bit more skeptical about, it would be cruise lines and it would be airlines. But I want to report objectively, we do have a breakout here. Royal Caribbean Cruise Lines, RCL, got the same thing, breaking out. This one's easily above these prior tops. So Royal Caribbean looks to me to be better than Norwegian, just because it looks like the breakout was quite clear here and the volume was strong as well. Regions Financial, RF, let's get back into the financials here. Look at this breakout. We had gapped down. We had not been able to break back up above 1140. That was not a problem on Wednesday. Closed up near $12. Volume picking up. Regions Financial looks like it's now on a roll. How about CAR, Avis Budget Group? This is a stock that I liked as it was moving up, getting close to a breakout level. We've got a short squeeze chart list over at we keep it at StockCharts, but we have it for our Earnings Beats members. And this is one that I was looking for a breakout. If we could get this breakout, I thought this is one that could lead to a short squeeze. I think that may have started here on Wednesday. Look at the volume picking up. Over 12 and a half, actually over 13 million shares, nearly 13.5 million shares on this breakout. I think you clearly could see some panicking shorts in the near term. Another stock breaking out that could see the same thing begin. Look at CHTR, Charter Communications, breaking out above this 520 level and volume picking up. I wouldn't be surprised to see some follow through on Thursday in Charter. BXC, this is Blue Links Holdings. This one, a little lighter volume, but I still felt like this breakout needed to be mentioned. Looks like a bottoming head and shoulders to me. Left shoulder, neckline, head, comes back up to the neckline, right shoulder, and there is your breakout on volume. But when we're not making breakouts like this, the volume can move down quite a bit. So you might want to be a little careful, but it was breaking out of a downtrend. So I wanted to point this one out. How about Macy's? Macy's breaking out. Very, very nice move through this $7 area. This was a stock we featured for Max Payne when the stock was trading below $5 just a couple weeks ago. Now the stock's $7.38, almost a 50% move. Probably has been a 50% move just here in the last couple weeks. But look at the volume picking up on Macy's as it makes this breakout. A lot of short covering going on there as well. All right, let's move on. Earnings Spotlight. Go through just a couple of earnings pretty quickly here. After hours on Wednesday, Autodesk reported they missed on their top line, beat on the bottom line. They guided fiscal year 21 earnings per share lower. The stock is down about 1.4%, or at least it was last time I checked. after hours. Anything back down near that 190 level, though, I think looks like a buy. WDAY, Workday. I didn't like this one going into its earnings report, but it did beat on the top line. Came up a little short, bottom line, 44 cents versus 47 cents, but the stock is up 5.7% after hours. So Workday looking to extend its recent strength, and so far continuing to hold that rising 20-day. Let's see, Network Appliance reported. They beat top line, beat bottom line, but they guided Q2 earnings per share lower. Stock was down fractionally in after hours. This is one that on a relative basis has been struggling. It's above the 20. I want to see it continue to stay above the 20, but I just think on a relative basis, there are a lot of others out there better. Toll Brothers beat top and bottom line, stock up 7% in after hours. A lot of these home construction stocks have really gained steam. Toll Brothers being one of them. Stock was trading up over $35 in after hours. We'll see whether or not that holds into tomorrow. A couple of stocks that came out reported very strong numbers and guided higher. Semtech, SMTC, stock up 14% in after hours, taking out all of these highs from back at the end of 2019 and into early 2020. Semtech looks good. And then SPTN, this is Spartan Nash Company. Top line beat, bottom line beat, guided higher, stock up 4% after hours. This is one that might gap up and pull back, but I really like the chart. Anything back down close to that 19 level would be a pretty good entry point for me for Spartan Nash. All right, let's go quickly into the three you must see. This is, first I'm going to show you GPS, which is Gap. This is a stock I pointed out in my daily market report earlier on Wednesday to Earnings Beats members. Like this fact that this stock was breaking out above these tops, and it rallied into the close. This stock was probably trading at about 980 or 990 when I sent this out at maybe around noon today, and GPS just continued rallying into the close, up probably another 7% or so just in the afternoon alone. FITB, this is Fifth Third Bancorp. Talked about the banks. Well, here's another one breaking out. Couldn't get through this gap resistance at 20 when it tried in late April. Not a problem on Wednesday. Big breakout there, increasing volume. I think FITB looks good. And then finally, I wanted to go over ETSY. We saw a tremendous rebound in NASDAQ shares. And I think ETSY is one of those stocks that kind of shows you the kind of rebound we saw in some of these stocks. Stock got down as low as 69.35, looked like it was breaking down, went down, tested the breakout area around $70, and then reversed, came all the way back up, printed a piercing candle, which is a bullish reversing candle at that 20-day moving average. We might see a little short-term weakness. Maybe we see a little bit of weakness in the morning on Thursday, but I do think this one's got a good shot to return back up to that 86, 87 area. Big reversal in ETSY. This was kind of a poster child for what we saw in the NASDAQ. A lot of reversals. All right. That's it. Want to thank everybody for tuning in. Everybody have a great day. Be back next week. Happy trading, everyone.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.